What's up, guys? It's your Money Cat. Hope you guys had a fun, safe Halloween, as well as survived last week. Last week was, just absolutely bloodbath. Just brutal. So today we're going to talk about if the market will continue to fall and what kind of stocks that we need to be in to be able to sleep soundly at night. Right now, there are two things that's driving up the market volatility as well as what's pulling the markets down. First is the election, which will happen next week. And the second is the pandemic, which is continuously increasing both in Europe and US. Of the two, I'm more concerned about the pandemic because it will be much longer lasting. The election, once it's over, it's over. There will be a shock and then people will get over it, people get used to it. Yes, it might drag on to be a mud wrestling kind of battle where they're taking it to court, they're doing recounts, but it will be over. Just as a reference, let's look at this chart, which is a collective average of S&P 500 on election years. So the pink is the average year, and the blue line here is just the election years. Noticeably, there's a big dip in October leading up to the election. But once November starts, the rate of incline is pretty much same as the normal year, leading up to a strong finish. So knowing this, the election doesn't really pose as a threat to me. It'll be a short-term volatility that'll work itself out. Now, this pandemic, however, is a different story. Last week, we pretty much made new daily record every single day. The 7-day rolling average also made a new high. And seeing what's going on in Europe, likely US will continue to increase in number of cases, and this will get worse as we go deeper into the winter season. This is a better visual graph. As you can see, we made a daily high last week, as well as the 7-day rolling average is heading higher, making it higher highs and higher lows. It seems that Europe is a little bit ahead of us in terms of the pandemic worsening. And just yesterday, England announced that they are going into national lockdown for the second time this year because of the same pandemic. Many other European countries will be following suit, if not already, and US will probably have to decide sooner or later whether they want to follow the European countries and go into some sort of lockdown or not. The charts also don't look very good. Looking at SPY chart, 1-year daily time frame, we made a double top here, which is a bearish sign, as well as failing to reach the high of September. So we're also making lower highs. We've also gone below the March high level, so now we're back into kind of that beginning of pandemic phase. We're close to reaching the support level at 320 or so, and if we do break below that, then the next support line I see is around 300. So next week, defending this 320 level is very, very important because I think once we are below that, then we are definitely in a bear momentum territory. Now, don't take this next part so seriously, but just for funsies, I was like, I wonder if there's any sort of pattern looking at a bigger picture. So I looked at the 5-year weekly time frame chart for SPY, and this is really, really scary, but there is what's known as a megaphone pattern. So megaphone pattern, if it does continue, then the next destination for stock market is right here. So the megaphone pattern, it continues to bounce up and down into a flare out. Now, don't take this too seriously because I personally don't think this will happen. The reason being, back in March when we had that huge crash, it was mostly because we didn't know anything about the pandemic, about the virus. And fear is mostly driven by what you don't know. However, this time, even though the virus is getting worse, we at least know what it is and we have more information about it. So there is no surprise factor. But I thought this was amusing nonetheless. Let's hope this doesn't actually happen. Looking at QQQ, very similar story as the SPY chart. We made a double top while making a lower high compared to the September one. Locally, we're in a nearly perfect downward trend right now. And along the way, we've broken down 2 support levels heading into a third one near 260. We're now also below the 180-day moving average, which usually signifies downward trend. So in a market like this, personally, I'm looking at companies that are strong financially and are top of their sectors, meaning they have a stronghold in large portion of the market share. So these companies are basically the ones you know, the big tech companies, Amazon, Apple, Microsoft. Companies like these, you're mostly looking to invest with a long-term perspective, meaning even if the stock does continue to go down, overall, over 5 years, over 10 years, these companies will continue to rise up. But not only that, I actually think for some of these companies, the pandemic can continue to boost the company up. For example, like Amazon, their sales, their revenue, their earnings, they have been on fire because more people are looking to buy online through Amazon. On the flip side, if a vaccine is developed and pandemic is controlled, there is more relief. What happens? Well, you're still in good position because you know companies like Amazon, Apple, these companies already thrive in a normal environment. So it's kind of like you're protected on both sides of if pandemic gets worse or if pandemic gets better. I will be releasing videos on some of these specific stocks, looking at the charts in more detail. So please stay tuned, subscribe for videos like those. Thanks for watching. Please tread carefully as there will be a lot of stock market volatility in the next few weeks. As always, I wish you guys best of luck in your stock market endeavors.